Good morning, trading world. It is February 3rd, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. The title of today's outlook is "The Momentum Train Losing, and Despite What the Fed Says, Get Ready for a Crash Landing and Not a Soft Landing." If you have been following me for a while, you know I like using analogies to make complicated explanations less complicated. The Fed says they can give us a soft landing without a major recession. And to me, that is BS. Trying to navigate a soft landing for this economy is like trying to parallel park. Okay, sorry about that. Where was I? I was giving an analogy, or about to give an analogy, about how the Fed thinks they can navigate a soft landing, which is damn near impossible. Trying to navigate a soft landing in this economy is like trying to parallel park a 70-ton tanker ship at a floating dock in a fog so dense you can't see 20 feet in front of you, much less the 200 to 300 yards of visibility needed, with 20 to 30 foot crashing waves. Now, in that example, the economy is the 70-ton tanker ship. The waves are the effects from other economies around the world. The floating dock are rates, and the fog is money supply. One way or another, something is crashing into something hard. The yield curve continues to get worse. The 2-year is at 4.09%, and the 10-year continues to crumble away down to 3.4%. It was just a year ago that the 2-year was at 0.78%, and the 10-year was at 1.63%. Right now, there is no reason in sight to invest in further dated treasuries when you can get 4% or better just on a money market account right now. So this continues to be a foreseeable problem in the economy. And tag that with something that I continue to speak on, is that we've had a bunch of rate hikes, 7 or 8 at this point. I've lost count. But it takes 12 to 18 months for those to filter through for Main Street to see the effects of that. And we're just in the beginning stages of feeling the first and second rate hikes. So somehow they think they can navigate this into a slow or a soft landing. It sounds like a bunch of BS to me. Moving on, as we move through this topping process, you start to see momentum wane. The market has stopped going up, or will stop going up, but there is a period in which moves become progressively slower before reversing the other way. Another thing that has started, that needs to happen, is that we have to cycle on the higher time frames. We need to complete a full cycle on the weekly and a half cycle on the monthly before reversing. the market is still in an irrational state. So even with harmony today between the technicals and the quants, I don't quite have faith enough to do full contract size on intraday moves. However, I am willing to short with longer dated options, mainly bear put spreads, blindly above 416 to the 420 area. With that, let's get to the key levels to watch for today. And here we are with the key levels of the day. Starting on the resistance side, we have our Jack resistance at 413 to the 414 area. Queen resistance is going to be 415 to the 416 area, which is going to be very, very pertinent today. It's going to separate a lot, kind of determine what type of day we're going to have, basically on the rejection of this area. And then we have the King resistance area, 417 to the 420 area. At this 420 area, if things really blow out of proportion, I probably could have put the next main channel's upper edge here at I think it's 425 if I'm correct. Let me usually get to it a little later, but yeah, it's around that 425 area. So if things really get going and blow out of proportion, we could really kind of speed up and see that 425 area. Now, on the support side, we have our Jack support at 412 to the 411 area. Queen support 410 to the 409 area. King support 408 to the 405 area. The main thesis for today is bearish, closing below the 416.78 with a projected target low of between give me just a second to check something here. Alright, that bearish bias, we have a projected target low of between 416 and 405. The alternate thesis is bullish, closing above the 416.78 with a projected target high of between 417 and 420. The main channel we are in is 397 to up to 416. The main channel above that is 416 all the way up to 425. Yesterday, market strength and breadth opened, gap down, and continued down briefly before consolidating and shooting back up to the top of its range and then trailing off the majority of the day. This is something that was key for me yesterday in putting on short positions because of the waning strength and breadth, which tells me that momentum, it's disappearing, it's drying up. I expect something similar today as the trail off in breadth is signaling that this momentum train is losing steam. We do have harmony between the technical side, which is bearish, and the quant side, which is bearish. However, the market is still irrational because of order flow imbalances from Tuesday. This is the reason why I'm not confident on intraday things taking full contract size. Because of that irrationalness, because this should be a down day today. However, it's quite possible that we see another power up, but we have to wait and see what happens today, how strength and breadth go. This brings us to the scenarios of the day. All right, our first scenario is going to be our expanded range day structure. We could have an initial push lower to support before consolidating and powering back up in a larger time frame consolidation. Most people are not going to understand or know that this whole thing that we're in is basically a larger time frame consolidation, but that's what is happening when you step back and take the 30,000 foot view. All right, the second scenario is going to be our rounded reversal day type structure. And what's crazy about this, the closer we get to closing, the more this gains and gets closer to the probability of the expanded range day, where these could pretty much be neck and neck by the time we get close to the opening bell. The rounded reversal day type structure, we could get a continued push higher toward jack or queen resistance area and find midday chop around either the queen. We're going to keep it pretty much at the queen resistance area before going back down with the same energy of force we went up with the first part of the day. And that's what's going to separate the scenarios today, is that how we interact and if we interact with the previous close. Staying below and chopping just below, maybe a few but not closing above it in this consolidation chop zone, and rejecting it tells me we're at the rounded reversal day type. We also have a vice versa alert for this scenario today, and that vice versa alert could look like this, where we come to the opening bell and then continue lower, finding our midday chop around our possible queen or king support area. And then continuing into the second half of the day with a push up with the same amount of force or energy that we came down with the first part of the day. So that is the vice versa alert on our rounded reversal day type structure. All right, our last scenario is going to be our trend day down day type structure, which means we open, gap down, and start with a push back up toward that previous close represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around either the possible queen or king support area, and not all the time, but often we start the second half of the day with a head fake, which looks to, or seemingly looks to, continue the primary trend of the morning, which would be down, and then at some point reversing and getting a rally into the close. What I would be looking out for today is that if we decide to reverse and rally into the close, it could be a very strong rally into the close. So that's something to keep an eye out for. These are the scenarios that I am planning. or preparing for. I hope this helps. As always, your most important job as a trader is to protect the capital that you already have. We do so by knowing and understanding the risk that we have on in each position, and we manage that risk in accordance to our account size. Wishing you a positive trading day. Let's go out and make it a great one.